and welcome. Thank you for joining today's webinar, the VAT Reality Check for U.S. Companies. I'm Garrett, and I'll be today's moderator. Today, we're going to be talking about the risks of delaying compliance when expanding into Europe and how VAT really differs from U.S. sales tax, and what finance leaders can do now to stay ahead. We're joined by Div Ravajan, Global Indirect Tax Lead at Anrok, Rob Spielman from VAT IT Compliance, and Julian Lapp, who is also from VAT IT Compliance, plus an expert in e-voicing and digital reporting. So 2 quick notes. If you have any questions, please use the Q&A function in the right-hand side of your screen. We'll save some time at the end. And as always, we're sharing best practices today, not legal or tax advice. Div, if we could, let's start with you. Would you mind introducing yourself?
Hey Garrett, my name's Div. I lead the Global Indirect Tax team at Deloitte. A bit about me, I worked at a Big Four accounting firm for a long time, and then I switched over to Anrok. So I have expertise internationally with companies in the US, expanding globally, and now at Anrok, I'm here to kind of make everyone's life easier and really help those US companies expand, get their compliance right, and also get their exposure right moving forward.
I appreciate that. Thanks, Div. And then Rob, over to yourself.
Thanks, Garrett. I'm Rob Spielman. I'm the director of the Denver office of VAT IT Compliance. I started my career in the capital markets, worked there for about 8 years, and I've been in global indirect tax since 2017. I work very closely with Anrok to help their clients with global VAT compliance.
Thank you. And Julian, perhaps a quick hello.
Thanks, yes. My name is Julian Lapp. I'm the head of regulatory affairs at Easy, powered by VAT IT. It's our e-invoicing business and product within VAT IT. I've been within the VAT IT group for the last 5 years or so, and working specifically on the e-invoicing product for the last 4 years. And yeah, otherwise a lawyer by trade.
Great. Well, let's dive in today. Rob, Div, if we don't mind, we'll start with you. In your experiences, why do so many U.S. companies underestimate European VAT obligations?
Yeah, so I can kick this one off, but a lot of times, companies are growing really quickly. So they manage their US compliance quite well. And then in the EU especially, it's that first sale that triggers that nexus, right? So they don't really catch that, and they start growing exponentially because it's so easy to make sales online. And now they've got all these VAT liabilities. Likewise, I think the biggest difference between the US and the EU, and just VAT generally, is that in the US, your taxability is determined on a B2B and B2C based on a product ID, whereas internationally, that is based on your VAT ID. So a lot of times customers might think they're selling to a B2B customer, but that actually might not be the case because they might not have a VAT ID. So that is a big pain point that a lot of customers see. And I think, Rob, you can add some more here.
Yeah, I think that's great. I'll add to that the rules are foreign. I think trying to associate them with how it works exactly with US tax is a mistake many make. And I think sometimes it's just too late before they realize that the VAT rates can be high. The thresholds are often zero or very low, and penalties and interest can add up quickly. So I think that they just merely underestimate it.
Okay. And I guess when you talk about VAT rates being high, penalties and interest, what does that financial impact look like when businesses delay VAT compliances?
Yeah, it can be substantial on both cash and valuation. And I've seen it on the valuation side in my prior roles. The problem is that it's growing with every sale, the VAT liability. So quite literally, companies become victims of their own success. And the more successful they are, the busier they are during that period, the more VAT they miss. I'd say the extreme cases I've seen would be, just a few months of delaying while the company's scaling quickly could equal millions in lost VAT.
Wow. Okay. And then I guess, Div, you kind of touched on this in the previous, but when companies are thinking about like thresholds or triggers, can you go into a little bit more depth around how that's typically triggering everything and how they should be thinking about that?
Yeah, so I think generally, if you sell internationally, you're probably going to hit a trigger. A lot of countries don't have thresholds. A lot of them are zero. So it's that first sale I think some other countries are a bit more lenient. For example, Australia has a $75,000 threshold. So depending on which country you do sell to, there are different thresholds, but generally you're always going to pretty much breach that threshold once you start making a lot of international sales. And a big thing as well that Rob was mentioning is that because of that, percentages are quite high. They range from 15 to 27% in some countries. If you're not looking at that and you're not proactive about that, that does stack up. The liabilities stack up, and then you're in that situation where you've got to look and figure out how you're going to remediate or pay all this cash that you didn't account for originally.
Okay. And then I guess when we're thinking about US versus international, why would you say that companies enter the European market with like a false degree of confidence as they expand?
Yeah, and I think the main thing that we see a lot of is that customers are just really unaware, right? As I mentioned about the B2B, VAT ID, a lot of customers don't understand that they need to collect a VAT ID to kind of make those transactions non-taxable or reverse charge. And then likewise, US has thresholds, transaction counts, whereas the EU doesn't. So there might be that false sense of, hey, like we can delay this a little bit without realizing that it's a bit different to the US, where when you do make that first sale, which is a B2C sale, you are going to be triggered. And then the other common thing that we do see is a lot of customers think that they're selling to B2B customers, but that sometimes isn't the case. So when you haven't collected those VAT IDs, they are B2C, and now you do have an exposure. So there is that real misunderstanding of how important and different the EU rules are, and just generally internationally compared to when we look in the US.
Okay, I think that makes a lot of sense. Rob, I guess when you think about some of the like key differences structurally, is it around like timing of collection, the reverse charge piece, or even just like registration requirements that seem to trip companies up?
I'd say I mean, I constantly hear customers speak of it in terms of the US rules for registration. So I like to kind of correct that and start to identify what is the taxability of your product, but also make a plan early. The reverse charge is probably the thing that I would echo as the most important if you sell B2B. I think there's a lot of misunderstanding around that. And since the rules also, the term reverse charge can apply to goods, it can be very confusing as you search for this online. So it's just worth having a plan. I think the other thing is that some companies don't realize that certain countries take longer to register in. So the timing of getting a registration in, say, Mexico is 7 months. You wouldn't want to react in Mexico. You'd want to be proactive, but you'd also want to know, great example is actually Mexico, that it's an expensive country. So some planning early on can identify where you have thresholds, where you can test the market, where it's low and you have to register, and you can kind of look at a budget of which countries might be successful markets for you, and then maybe focus on those and try to avoid the ones that could be a headache. So yeah, I'd add to that.
Thanks for sharing that insight. And I guess I know we've talked a lot about US companies so far, but when we think about like the flip side, how do European companies struggle when they are entering the US markets and when they're thinking about sales tax?
Yeah, so a lot of the times, the US obviously is a whole new ball game compared to the EU, and I think on the flip side, it is quite foreign, right? US sales tax is foreign. Some states don't tax SaaS, some do. There are nexus thresholds. There's different reporting requirements, and it's essentially a new concept. So a lot of of those international customers, when they do enter a US market, realize that it is quite complicated, and there are a lot of things that you need to do to make sure you register, you remit. So that lack of knowledge is a big reason why we see customers struggle with entering into the US market and being compliant.
Okay. And then Julian, anything you'd add on that front?
I think there's also some complexity, certainly for European companies that are used to, in the e-invoicing context, a lot of automation and e-invoicing processes across Europe, and having to adjust to that, especially in the US where it's not as prevalent. And you look at different systems and different networks if companies are doing it. So just trying to understand those differences and how they may affect their processes from an invoicing perspective is very important as well.
Yeah, I like that you touch on that. I think with some of the new VIDA regulations that are coming across and reshaping things, how should finance leaders be thinking about that, specifically about the real-time reporting pieces?
Sure. Well, look, the VIDA regulations are obviously very extensive. They affect quite a lot of how business is done in Europe. And there isn't a lot of time to respond. I know it's 5 years, but that disappears quite quickly. I think some of the important things is that e-invoicing mandates will start becoming more prevalent throughout the EU. They already are some there, but more and more will be announced. Thankfully, in some cases, they don't apply to non-locally established VAT registrations, as well as not to digital services, but some do. And then for real-time reporting, this will be very important, especially when talking about US companies doing business in the EU, as they will need to be reporting this data not only to the relevant tax authority that they're dealing with, but ensuring that that data is of sufficient quality for the rest of the EU countries involved as well in those transactions.
Okay. And then I guess, Div, Rob, or just to the group, is there anything that you guys would add so that way these businesses or these companies can stay ahead of this when these obligations go live?
I think from my perspective, knowledge is usually very important. Understanding what's coming. Sorry, Div, there. Understanding what's coming and when they need to comply with certain things, specifically in the context of VIDA for me. That will really allow you to prepare and make sure that you can adjust whatever systems that you are using to ensure you're compliant going forward.
I appreciate that. And then anything else you guys would like to add to that piece? Perfect. Well, I guess when we're looking kind of at the next pieces there, I know that you've talked a lot about how that's going to be changed, how we're thinking about that going forward. But when companies are evaluating expansion, what is the first step in a readiness assessment today?
I would just say to have the conversation early. It costs nothing in most cases to have a conversation with Anrok, to have a conversation with VAT IT and make a plan. You can highlight the taxability of the products. You can understand some of the complexities in countries. Some people might just want to start with some easy jurisdictions that are low cost and typically high impact to businesses. So the biggest thing that I find is that companies wait too long, and particularly with B2B sales and how it ties back to that reverse charge. The amount of times that I've heard something similar to, wow, I wish I knew that last year, or I wish I had that numbers collected. A lot of times we're reacting to a situation that already exists and trying to kind of clean it up and fix it. And it always costs less to just be ahead of it. Even if you're not doing anything for it, having that plan will still end up costing you less because you'll be aware. And if you're on Anrok, you'll have that dashboard tracker, and you'll essentially have every tool at your fingertips to solve the problem.
Yeah, and just to echo that point as well, I think a lot of times we see customers are not proactive, and every year or 6 months they'll look at their exposure, or they'll do some manual calculation to figure out where they need to be registered in. Whereas using software like Anrok, we are providing that real-time exposure monitoring, so it's kind of hands off. And when they do make that really big sale, or they've got sales in a certain market, they will be notified. So it is a preventative way of just being ready, being prepared, and knowing that, hey, like, we're starting to see a lot more sales in this market. Should we be proactive and register now, as opposed to waiting 6 to 12 months down the line where that exposure is now significantly higher?
Mm-hmm.
Okay. And then I think when we think about the role of partnerships here, specifically, when should a finance team bring in an external specialist instead of handling VAT themselves?
Honestly, there's not a lot of times that I see it work internally, as in to set up the function where you'd have all the capability to speak all of those languages and understand all of those rules. I think it costs more, if I'm understanding the question correctly, than to just have someone you're essentially outsourcing those roles to. Primarily what we find that our clients need is actually some hand holding and understanding of the process. You can even explain the next step, so to speak, but if you can't put the color around why or answer the questions or really look at the unique or what could be unique, for a specific business, you might miss that, the company's actually in gambling and there might be an exemption within the space. So I think that there's, it really all comes down to research and planning, like I keep saying.
Yeah, and I think I agree. There's a lot of resources that need to be devoted to really understanding, especially when it comes to the EU context, all of the different rules and regulations in play. And often there just isn't enough capacity, especially from internal teams to keep up with that. And as Rob says, also deal with some of those intricacies and minor exceptions or rules per country as well. And I think, we've seen it's a lot more than just offering a product that can provide compliance from the e-invoicing side, but it's actually more about supporting the companies in understanding and having the knowledge to ensure their compliance and make sure they're doing things as efficiently as possible.
Okay. Thank you, Julian. Appreciate that, Rob. I know we've covered a lot of the risks of waiting, why VAT is not the same as US sales tax, and VITA, how all the rules will change around that. I guess before we wrap, Div, Rob, Julian, what's your final piece of advice for US companies entering the European markets who still see VAT compliance as something that they can push off until later?
Yeah, so my advice is to just start the journey early. So, use a software or use some sort of way to understand your liability. And especially in the EU, where there are 27 member states, those countries add up quite quickly. So the biggest piece of advice is if you are making or planning or even thinking about making any sales in the EU, be aware, be proactive, and be prepared, because it saves a lot of hassle if you're prepared and you're ready to register or collect those VAT IDs. Because down the line, if you don't, there's so much more admin and time pressure that you will need to devote to kind of clean up your past liabilities.
I think that's perfectly said. I would have said don't put it off, but I'll also add a different level of, or a different angle of don't put it off. Don't put off entering the market, because you can, you might not be aware that you don't have to set up an entity in Europe. You don't have to expose yourself to corporate taxes. And there are a lot of customers there, and there's a lot of money outside of the United States. So the other reason not to put it off is that sometimes I see some really big markets, some really big exposures, and it really can grow a business to be in that market.
Yeah. And I think on that line of don't put it off, as well as maybe emphasizing what we've spoken about until now, is also reaching out and getting some expert advice, making sure that you aren't wasting time and resources trying to, potentially figure things out for yourself, especially in markets where it does become a lot more complex. Rather reaching out and building a plan with an expert provider that can make sure that and help you do things as efficiently as possible, will help you save money in the end, not only from getting it right the first time, but also in any sort of non-compliance penalties that may come in later on that you weren't aware of or anything.
Okay. Truly. Companies spend a lot of time looking for the information online, trying to understand the rules, and in 30 minutes or an hour, they could truly understand everything they need to know and have some sketched out plans in terms of where they might want to focus versus not focus, depending on what their needs are.
Thank you for that. Real quick, I just want to thank everybody for joining today. We're going to be shifting over now into some of the questions that have come up in the chat. So let me go ahead and switch things over a little bit. And this is going to be open floor, so anyone can move forward with answering these. But starting from the top, how should US teams map European revenue by jurisdiction to avoid missed registrations?
Yeah, so this is a good one, and basically the easiest way is to use like a system like Anrok. We do collect all that information, mapping it to certain countries, and apply the different VAT rates to get that exposure number. So that's one way that can be done, and it's generally the easiest way because you're already connected into a billing system. So it's a very hands-off approach. The alternative way is a very manual, laborsome approach, where at the end of every month, quarter, annually, you download your revenues, you get an Excel spreadsheet, you Google search the VAT rates, you do a multiplication, and that is a very tiresome, burdensome process, and it does take a lot of time. So those are the two options. I think a lot of customers love the first option because it's quite easy to integrate and it's real time as well, and all the work is done for you in the background.
Yeah, I'll actually add to that when we get into the system, it's got everything we need. So that's why we love pulling the data there. And oftentimes the conversation will start with the dashboard, and then we'll offer to look at some of it, try to kind of build that plan around it to the extent that we have the data. So it's I'd actually say that the system is probably the best way to do it.
Perfect. Well, let's move on to the next one. I guess, how should US teams map European revenue by jurisdiction to avoid some of those missed registrations?
Yeah, so with that one as well, luckily in the EU, there is something called the EU OSS. So you might have liabilities in 25 member states, but for a lot of US companies, you can do something called the EU OSS registration, which you are registered under one single registration, which covers all 27 EU member states. So yes, you might have liabilities in 25 different countries or 27 different EU member states. That might be super scary. But in fact, it's just one registration that you would need to do, which covers all your countries and all the sales in those countries. So you would essentially just register for that once, and every quarter file that return and be in compliance. So with the EU, super easy, super quick system where you can just register in one member state and covers all 27 member states.
Yeah, and that's one that's big, Div, because a lot of companies don't realize that if they wait too long in the EU and they have a significant liability, then they are looking at an individual country basis that can be very expensive. So I'd say the very best thing that a company could do would be to be speaking with you guys early and get that registration set up as early as possible before they have that liability. I'd say if anywhere is a spot that you should notice the sale and start thinking about it right away and take some action, it's probably the EU because of that OSS.
Okay. And then I guess, how strict are tax offices in the EU generally versus that of the tax offices in the US?
Not an expert on the US, but from what I hear from the clients, I certainly know the global side well. It can be a lot more strict. I've certainly had customers ask me if they can take certain paths that we would think that the tax offices in most countries would actually be quite put off by. And I understand it to be a fairly normal process in the US. So I think that's the other thing that people don't expect. They kind of think that they can, that there's some way around paying the tax. And there really isn't, in a way where you wouldn't be looking over your shoulders and be exposing yourself to more risk than you really should.
Yeah, and to add to that point as well, I've seen a lot of, when there are M&A deals or when a company is trying to get bought out, when they do that evaluation of your VAT liabilities, if you haven't registered, a lot of times they're going to take out the price of the tax you owe. They'll add some penalties and interest. So if you are planning to sell your company or even trying to IPO, there are certain things that they take out of your balance sheet or the purchase price as well. So that all gets factored into. And it's not just the VAT liabilities. It might be penalties, interest, and penalties can vary, and they could even be like penalty over penalties, because it's not just like a flat fee, but it's, hey, you've been trying to mislead the government, so we're going to put more penalties on you. So whilst customers try to sometimes avoid or try to do unique situations, it's always best to be compliant, just because there are downstream effects as well.
Okay. And then I'm going to go ahead and skip ahead here. Rob, do you have any examples you could share of penalties or back assessments a company faced or delayed with VAT registration?
Yeah, I'll give you two. Obviously, not naming any names, and there's many situations that mimic these and are very close to these two situations. But multiple times, even this year, I've spoken to companies who have invested cash they have and have found out that they're in a position where they don't have enough cash to pay their liabilities. Quite literally, they're in a position where if they do get compliant, they also have to go Chapter 11. That's an extreme case, and I think we often don't see that, but certainly, there should have been numerous signs to that business that they should have looked at this. And I think what they told me was they just kept putting it off. I've also had situations where people have started the process, but then kind of delayed the process because they were starting to grow quickly, or they were hiring, or they were, doing something. And, in as little as 3 to 6 months, a company that's grown quickly can have a lot of volume, and that can add up quickly. So you might be in a situation where you're saving maybe $140 a month in a filing fee, but you might be incurring 30 to 60,000 in VAT a month if the company is very large. So I see it very quickly where it becomes millions in a short period of time. And then you're looking at the interest plus the penalties, and it just, there's really never, I should say there's very few situations where the economics don't actually make sense to register. And in those cases, it's a commercial decision for the company to make. We can inform them on what the rules say. We can let them know what the risks are, but then it's their decision. At least they know that they should be looking out for this growth, and that they're 6 to 8 weeks away from being in a position where Anrok can charge that tax for them.
Okay. And then, Julian, maybe this one's best for you next, but what's the difference between OSS and single VAT registration under VITA?
Right. Yeah, that's a good question. Basically, there's some technical details that are slightly different. The OSS is a special scheme designed for certain transaction types and certain circumstances where a single VAT registration can accommodate multiple requirements over the EU. Whereas the single VAT registration that's being introduced in terms of VITA is a far wider context. So it would cover almost all cross-border intra-EU transactions, including B2B transactions. And it really is stepping away from the norm that we've seen with the EU up until now. The OSS will be extended a bit further in terms of VITA as well to some more transaction types. But again, it's only actually relevant for companies that fall within the special scheme, whereas a single VAT registration will be more applicable to more companies that are entering the EU market.
Perfect. And we'll wrap up on here. We have a more specific circumstance. We're a SaaS company with more and more European revenue. When does e-invoicing become mandatory / when do we have to start worrying about it?
Okay. I'm going to give you a general answer because unfortunately every country's e-invoicing rules are very different. The general answer is once you have a VAT registration in a particular country, let's say in the EU for now, you need to consider whether e-invoicing is a requirement for you. There will be other circumstances such as whether or not you are locally established, whether or not you offer digital services or other services, and this is where the rules get more tricky. But the bottom line is if you have a VAT registration, something may apply. That's at least for the time being. With VITA incoming by 2030, there will also be your digital reporting requirements, DRR, that will become applicable as well across the board. But for now, as soon as you have a VAT registration, it's at least worth asking, do I need to comply, and figuring that out before proceeding.
Great. Well, thank you, Julian. Well, thank you for everyone who's joined today's webinar so far. Huge thanks to Rob, Div, Julian, 3 of you, really just sharing your expertise. I think it's been really great to hear all of your feedback today. For everyone that's been attending, you'll receive an on-demand recording of this webinar later today, and I hope everyone has a great day today. Thank you.